Hi, and welcome. Today, we're going to talk about a popular investment tool, the ETF, or Exchange Traded Fund. You've probably heard the term ETF before, but what exactly does it mean and how does it work? Let's break it down. An ETF, or Exchange Traded Fund, is an investment fund that's traded on a stock exchange, much like individual stocks. However, an ETF is different because it's not just one company's stock. It's a collection of assets. These assets could include stocks, bonds, commodities, or even real estate. So when you buy an ETF, you're essentially buying a small piece of many different investments at once. To understand how an ETF works, think of it as a basket that holds a variety of investments. For example, an ETF might contain shares of the top 500 companies in the US stock market. When you purchase one share of this ETF, you're essentially investing in all those companies at once. The price of the ETF can go up or down based on how the underlying assets are performing. ETFs are bought and sold on stock exchanges just like individual stocks, which means their price can change throughout the day. The price of an ETF will fluctuate based on the supply and demand for its shares, as well as the performance of the assets inside the fund. So, when you buy or sell an ETF, it happens during market hours, and the price reflects real-time changes in the market. ETFs have become very popular for a few reasons. First, they allow investors to gain exposure to a wide range of assets all in one investment. Instead of buying individual stocks, you can invest in a whole sector or index, spreading your risk. Another reason ETFs are attractive is their cost-effectiveness. Many ETFs have low management fees compared to actively managed funds, because most of them simply track an index rather than being actively managed by a fund manager. Lastly, ETFs are highly liquid, meaning they can be bought or sold quickly during market hours, just like stocks. There are different types of ETFs, each focusing on a specific kind of asset. For instance, some ETFs track groups of stocks, such as the S&P 500 or tech stocks. Other ETFs focus on bonds, which are loans made to governments or corporations. There are also ETFs that track commodities, like gold or oil, as well as those focused on international markets, providing exposure to stocks outside the US. No matter your investment goals, there's likely an ETF that suits your needs. It's an easy way for investors to diversify their portfolios without having to buy individual assets. Whether you're looking to invest in stocks, bonds, or even commodities, an ETF can be a convenient and cost-effective way to gain exposure to a variety of markets. Thanks for joining me today. If you found this helpful, be sure to like, share, and subscribe, and feel free to leave any questions you might have about ETFs or investing in general in the comments below. Happy investing!